The big mystery has been revealed. I'm going to bring that information to you today. The very first thing is China being the mystery buyer. What are we talking about? Stay tuned. The second thing, China is on the move. Who are they looking to and who are they making deals with? The third thing is the economy and the recession. I specifically want to highlight information coming out of China as well as some others that really start to connect the dots. I've got all of that and more. For many years, people have been speculating about China's purchases of gold, suggesting that they've been buying mass quantities, and right now they have been reportedly buying a lot of gold. It is nowhere near what they have claimed and what some people have claimed, like Jim Rickards and others, but we can tell at least some of their purchases that they've made public. China reveals gold buying after quarter of mystery purchases. Move may be a part of the PBOC, the People's Bank of China plan to diversify away from the dollar. I'm going to do an entire breakdown of this for you in a few minutes. Stick with me. Central bank can be infrequent in reporting its gold holdings. They're not going to come forward with that immediately like some other central banks do. This is something that we get sporadically, and when I do, I bring you that information. China reported an increase in its gold reserves for the first time in more than 3 years, shedding some light on the identity of the mystery buyers in the bullion market. This is important because for a lot of people, they're watching this and they're saying, hey, all this gold is getting bought up, but who is buying it? Now we know it's been China, at least recently. Jump in reserves. China reports increase in gold reserves for the first time in 3 years. And here you can see it. This chart goes back from the financial crisis time up until recently. So like I said, they could be buying it today and they could be buying it yesterday. We wouldn't really know, but at least we know where they're at publicly right now. Here at this time, I got some charts for you. In fact, you could see there was this massive demand in gold suddenly, and that remains to be China being the big buyer of that. China thought to be stockpiling gold to cut greenback dependence, buying of the metal at the fastest pace since the 1960s. So this is coming at a time in which the tensions are terrible in between China and the US as it relates to Taiwan. As we look for the BRIC nations, we'll talk more about that here. And of course, this is something that they kind of have to do. It's as if they're being backed into a corner. When you look at the actions of the United States and you see they're basically saying, okay, we're going to do everything we can to keep China down, to try and squeeze them. And so China is going back the other direction. They're trying to do everything they can. This is a war. It's actually happening right now before our very eyes. You can see the proxies that occur, and you could look at, for instance, Ukraine, Russia. That's really a war between the West or the United States and Russia. It's happening inside of Ukraine, but this is something that we need to start paying attention to and realize, wait a second, it's actually a proxy war that's taking place right now with China and the US, with Taiwan and so many other factors here. We're looking at what's happening: economic war, currency war, and others. Look at this, the gold reserves. You could see that claim anyway, that the United States has by far the most, 8,000 tons. If we look further down the list, you could see China having around the same as Russia as well. That's another important one because I know the chart's small, but you could see that they had been purchasing more. So they've been weaning off of the US dollar because of the sanctions, because of other things. They're basically saying, hey, we can't really do business with the United States anymore. They're sanctioning us. They're squeezing us in every category. And so we're going to go this route and, buy that gold. And why? Why is that the case? Well, if you stick with me a few minutes, I'm going to do an entire breakdown of that. I wanted to show you really quickly just some really, I would call it speculation, but it's really well-documented speculation by Zoltan. Zoltan used to work at what they call the desk at the New York Fed. And this is one guy, nobody knows more about the insides of the Fed and the repo operations like Zoltan does. And he started bringing up something in his latest report that I just want to bring up really quickly. If you want to check out the whole report, it's just 4 pages. You could see that at the link in the description under the sources. And basically what he's talking about is this oil price cap that's being put in place on Russia, and it's $60 a barrel. And they're kind of suggesting here that, that is roughly the price of a gram of gold. And so he's saying, let's imagine this set up as a peg. And he goes on to basically say that potentially, and he's saying this is a crazy idea, but it's still possible that gold could double roughly from 1800 to 3600. That would make Russia's gold reserves suddenly worth a lot more money. And this is important here because you could see the price of gold right now, and the countries that have a lot of gold potentially could be sitting on a lot more value, and that would give them a little bit more pull, as it relates to foreign exchange, as it relates to what their values seem to be on the international stage. This is something that I want to break down for you right now. China has been buying a lot of gold in recent years for a number of reasons. One of the main reasons for China's large purchases of gold is to diversify its foreign reserves, which are currently heavily concentrated in US dollar-denominated Treasury bonds. This concentration leaves China vulnerable to changes in the value of the dollar and gives it less control over its own economy. By buying gold, China can reduce its reliance on the dollar and gain more independence. As of 2019, China's foreign reserves were reported to be around $3 trillion, with only 2.5% of that amount being gold. This is relatively low compared to other countries, and China has been working to increase its gold reserves in recent years. Central banks around the world continue to buy gold as a way to protect against economic uncertainty and maintain stable reserves in the value. This is particularly important for countries like China, which has a large and growing economy and wants to have more control over its own financial system. Buying gold can help to achieve this goal as it provides a stable and reliable asset that can be used to help weather the economic storms. Quote, there's Ben Bernanke, like gold, US dollars have value only to the extent that they are strictly limited in supply. But the US government has a technology called a printing press, or today its electronic equivalent, that allows it to produce as many US dollars as it wishes at essentially no cost. Thank you, Ben Bernanke. That's what we're looking at right now today. And you could see that there have been some challenges and ups and downs and everything and swinging within that economy, but we need to understand what's happening geopolitically. Let's go into that right now here today. For a lot of people, they are going to be wondering what the future has in store. If you watched the previous video I had done, I discussed this. And now here we are. Netherlands said to plan curbs of tech exports to China. If that's the case, this is going to be huge. This is going to be huge. Dutch officials are planning new controls over exports of chip-making equipment to China. I told you that this, one of the biggest companies, one of the most important companies, I should say, they're in Netherlands and essentially saying that we want them to stop their exports to China in terms of chip making because the US is putting the squeeze on them. And that is so important because China needs these semiconductors. And so I don't know, let me tell you this, but this could push China towards going for Taiwan even harder now. That is just a thought that I've had, and I wanted to bring that to you. US Congress pokes China with Taiwan defense support and chips ban. Defense bill authorizes $10 billion in weapons for Taiwan. Bill would limit Chinese chips US companies could use. This is happening right now before our very eyes. Currency wars, economic wars, and the potential for hot wars. Please pay attention. I'm going to break it all down for you today in this video, okay? US planned broad military increased presence in China. Guess what that's for? We know this is obviously to do with China. Big time, okay? And now we've got Saudi and China cozying up like never before. These are the best relations that these two countries have ever had. I told you previously that the leader of Saudi basically went and said, we would love to join the BRICS. The BRICS nations. We are talking about a group that has like 40% of the world's population already. They've got, I think, 20 to 25% of the global GDP, and it's growing. And now many countries are either formally asking to join the BRICS or at least somewhat. This is so important because they're going away. You can see what's happening here, going away into a new order. This is so key for everybody. And do you think that the West is going to just allow it to happen? No, of course not. So we have a battle on our hands. And I use that term with intention. China is the largest trading partner of Arab countries. In 2021, the bilateral trade volume between the Arab countries and China reached more than $300 billion, an increase of over 1/3 from the previous year. These areas, whether we're looking at, let's say, China, India, and even the BRICS as a whole, and their trade with Arab countries has significantly increased. What do they have? I mean, I think it's pretty obvious, but I'm going to talk about that here in the breakdown, and you could see what's happening. They're doing this, they're going for it big time. Initial agreements worth $29 billion will be signed during the summit that's happening. So they're expanding. Okay, it's not massive, it's not huge, but that is something that shows that these two sides are partnering up big time. A strong economic relationship between China and Saudi Arabia is important for both countries. For China, Saudi Arabia is a key source of oil, which is essential for its growing economy. A strong economic relationship with Saudi Arabia allows China to secure a stable and reliable supply of oil. In addition, China wants to reduce its dependence on the US dollar, and Saudi Arabia is one of the key countries that China is looking to for alternative sources of trade and investment. For Saudi Arabia, a strong economic relationship with China provides access to a large and growing market for its oil exports. Additionally, Saudi Arabia is looking to diversify its economy and reduce its reliance on oil exports. And a strong relationship with China can provide opportunities for investment and collaboration in other industries. All big and very important information that everybody has to know. Not even if you are investing or living in either one of these countries, please just understand how this will affect everybody in the world. You could see here the port of LA is dealing with something that we haven't really had in the last few years, and that is pressures are easing with logistics. Warehousing costs are still high as transport expenses plunge. So there's always somebody that's got to make their money, got to make their profits, it looks like. And you could see that, many different statistics, okay, whether we're looking at the PMIs, which we talked about previously, or in this case here, they're just showing you transport costs, which has gone into a contraction, whereas warehouse costs kind of have come down, but, still quite high. I think that's dependent on many factors here, but I just wanted to show you that, give you the data. Freight rates from China to the West Coast down 90% as global trade falls off fast. So that's really the important one where we could see that things were going crazy 2020, 2021. That really has come down quite a bit. And another factor is China's exports and imports. Really, both of them have come down to levels we haven't seen since that period in early 2020. We look at, in sequential terms, the exports of fertilizer fell most in November, followed by cell phones. When you look at the data, breaking it down, if you're interested, you could see for yourself. I thought it was interesting with rare earths as well, because those go into so many different components and devices. For exports and imports contracted more than expected in November. So you see that happening right now. Lockdowns, everything. That's all of what I've been covering in the past. This is just showing us that the economy itself is really a whole bunch of moving parts. And if we don't focus on the real details of it all, we're going to miss the big picture. That's often what happens here. So you could see that China is going towards gold. They're trying to really ultimately lessen their dependence on the US dollar. They're signing new partnerships, new strategies. BRICS nations are really at the forefront of what will come in the following years. Did you find this video informative? Okay, then you got to hit that subscribe button because every single day I'm bringing new information that you need to know. So hit that subscribe. I'll see you tomorrow. Take care.